So I quickly want to go over when the initial balance Nasdaq strategy doesn't work well. Just from my experience in my back testing, these type of days are when the strategy completely does not work. It's very low quality. You'll maximum get maybe 20-30 points in a buy up or a sell off, and it'll most likely come without a proper setup or warning. So by setup, I mean there won't be like that staircase pattern I look for in the footprint. There won't be that buying defense or selling defense that I can rely on for a stop loss when I do enter the market. It'll be very sporadic, random, and it'll be quite choppy as well. So pretty much what I look for is the volume profile on the day. It's either B-shaped or P-shaped. In a bullish day, it's P-shaped, and in the bearish day, it's B-shaped. So in a bullish day, it's where the price pushes up and then pretty much at the initial balance level, it just chops around. This high volume node is because price is just staying in that area, exchanging contracts between buyers and sellers, putting in this volume. And usually because this move happens at the extreme and within the first hour of the day, that's where initial balance high is. And usually in the opposite manner, this is where initial balance low would be, and we just have an exchange of buying and selling in this area without much movement going either way. So just going through that, so B shape for the bearish and P shape for the bullish, it is pretty much a day when initial balance doesn't work because there's no continuous trades going up or going down in this way, and there's no continuous trades going back into the range that way. Bring up the chart here. So this is the overnight session for the 20th of May. So we have a pretty much a balanced kind of range. There's not really much in terms of high volume nodes in the middle or the ends. Either one is pretty even so far. We open up, and immediately when we open up, we start buying and we start going up. We start buying, going up. And you can see here by the volume profile, just where we are, we immediately buy up, and 18760, this red line over there, is the all-time high for the Nasdaq. So that's the highest point the Nasdaq's ever been. So we buy up, and just watch this volume profile, just this node here, compared to the rest of the price as we stay in this level. So you can really see how we just chop around in that area. We're just putting in more and more volume in that area, not really much happening. We do break out eventually, but the breakout fails and we come back into this range. We just put in more volume. So that was pretty much the session, that session there. So it's quite a P-shaped profile, I'd say. Very sporadic moves. We break out here. We have higher lows coming in. We're staying above the 90 EMA, above the 40 EMA, break higher lows, break above, fail, come back down, and we put in a new low here. We go back up if this is a low there, a low there, and then go back up, and then we have a higher low, turn around, back down, back up for a lower high, back down, back up for a lower high, back down, and then a new high of day, followed by a fail, below this low again, below that low, and below for a new low day, and then back into the middle of range. We chop in there. So very sporadic. The yellow line, 18758, 50 around there is the initial balance high that was set in the first hour of the trading session, and you can see that we're just chopping around within that range, around that, give or take about 40 points or so. Yeah, give or take about 40 points or so. This move is very sporadic, even this one as well. It's just not something you can really catch going into the session. If you look at the candlesticks, when I break down further during the start of the day, when we do move up, there is a buy opportunity here that you can take, where we bounced off the high, all-time highs, came down, we're supported above this low. There is a buy you can take there, but breaking in through to the high of day and breaking through that and failing, come back down, that is a bearish signal. Technically, if there was actual volume in the market and it wasn't just people taking profit which causes this profile. We should sell off and continue selling off, because we tried to put a new high, failed, rejected, and sellers stepped in. So if there were actual sellers stepping in and we're moving the market down, we should go down. But we go down for a new low. We go down for a new low compared to these lows here, and then we push back up to a high above these highs. So it's very sporadic action, and you can see here that the moves are pretty insignificant. This is about 20 point move from there to there. That move is about 40 points. It's very small moves. And here we have lower high, maintaining the same low, and then we just blast upwards without a sort of basing candle or pullback over here, which we can get into. We just slice through initial balance high, strike through the previous all-time high, go up, and we put in the basing candle there and keep going up. And then before we can even get to 18,800, which is kind of like psychological whole number level, we reject and we come back down, slice through, no bouncing, no consolidation, and then back into the low end of that range, and we just chop around there for a bit, dip down below and come back up and chop around on initial balance again. So definitely something that you want to avoid, because there's no clear sentiment from buyers or sellers. It's just someone exiting positions, or a whole bunch of people exiting positions. Usually it's ahead of news, earnings coming out, something like that, but we're not going anywhere. So for a B-shaped as well, it's completely opposite of this. We have a massive move starting with a sell-off at the start of the session within the first hour usually, and then for the rest of the day we just chop around at that level. So what I look for is, on these kind of days, if we just start the day with a huge boost or a huge dump, and then after that there's no continuation or reversal, that's kind of what makes me frown and go, maybe it's just the type of day to step away. It's not really a clean sort of movement. On the footprint as well, you can see there is, after the initial balance was formed over here, there's no sort of candle pattern that you can use as staircases. When we have buying defense here, which held over there, and we do push up into this initial balance high, when we do sell off again, this defense is hold, this defense is hold. Neither is this one. That doesn't hold either. We just sell off, break down, and then for a new low, and then come back up over here. This selling defense doesn't hold there. This selling defense, where we have large amounts of sellers stepping in, doesn't hold there. We just end up with this high over here above initial balance. We set off again and come back up, fail below initial balance, and then kind of chop around from there, and then break initial balance again. So very sporadic, very unpredictable, very random. When you see these kinds of days, you just trade some other market if you can, like the ES, the gold, maybe something like that, or you just sit on your hands, avoid trading this initial balance break strategy, because we're not going to break and go anywhere for you to capture a trending move. It's just going to chop around in this range.